Hi, this is Richard Flax from MoneyFarm with another daily video update. Yesterday we saw a strong performance in financial markets, even though we saw relatively weak data coming out of the Eurozone. There are a couple of points to make about this. Firstly, it should come as no surprise that macroeconomic data from the Eurozone was relatively weak in March. We should expect to see weak data for the next few months. Secondly, it suggests that the real drivers for financial markets, at least in the short term, will really be around government policy and the trajectory of the virus. So far, we've seen a pretty strong response from governments around the world. On the monetary side, we've seen lower interest rates, significant injections of liquidity, and a lot of commitment to provide quantitative easing and credit, and in some cases grants, for corporates and financial institutions to ensure that the plumbing in the financial system holds up. On the fiscal side, we're beginning to see more, and last night we got approval in Congress in the US for a significant $2 trillion, at least that's the headline number, $2 trillion package. How this precisely plays out is still a little bit unclear, but the bipartisan commitment that we saw, after some debates and disagreements, suggests that the US Congress is going to do what it thinks it needs to help support the US economy. That's particularly relevant as we see the virus really begin to take hold in the US and the numbers of infections and deaths sadly begin to rise there. So when we think about the situation going forward, we clearly see volatility, continued volatility, both on the downside and on the upside. It's worth remembering that moves of this magnitude in financial markets are not very normal. We haven't seen such a big rally in the S&P for at least a decade. And it speaks to the fact that financial markets remain pretty uncertain about the future, even if some of the policy moves that we've seen are broadly supportive. So for now, we'll continue to look at how those policies are actually implemented and focus on the underlying spread of the virus to try and understand when the trajectory begins to level off and when we might think about the start of a normalization process for the economy. The short-term macro data will remain relatively weak, but we don't think that's going to be a huge driver going forward. What will be more of a focus in the coming weeks and months is the duration of the economic weakness. The shorter it is, the quicker the economy can recover, the better it'll be for financial assets. Thank you very much for listening, and we look forward to speaking to you again soon.